More names in just a bit. Dhiraj Agarwal is Managing Director at Ambit Investment Managers. He's with us for a quick chat. Dhiraj, good morning. Great to have you with us here. Thanks very much for your time. And just sort of kick us off with your assessment of earnings, especially from financials and outlook here. Which part of financials do you like? Because that is where you've got a, generally there is tailwind of, I don't know if it's helpful or not, but on the institutional side, people are bullish. I mean, people want to own financials, and everybody's got their own spots: gold finance, NBFCs, large private banks, small. So there's a fair bit here. On the other side, you also have the RBI, at least trying to prime growth here, kickstart lending in a big way. It's languishing at about 10% system wide, and they really want that to move higher. So let's just start with that space, Dhiraj.
So financials results in general are pretty decent, especially the large banks. And that space is interesting because there are no issues or negatives in that space at this point of time. So the NPL issues are very much under control. There is no credit crisis in the country. The only issue at this point of time in the financial services sector is that the loan growth, as you rightly said, or the credit growth is a little weak. It's come down to 9 or 10%. At this point of time, the market is expecting or hoping, depending upon which camp are you in, that the credit growth and the economic activity will pick up starting second quarter of this year, and more importantly, in second half of this year. Now, the great thing about a forward-looking positive expectation is that the current weakness, in some senses, does not matter, right? Because it's sort of priced in, it's expected. So the current results are pretty much in line with expectation from that point of view, that the credit growth numbers are tepid, but all other metrics are quite good. There are hopes and expectations of a credit growth and the economic activity pickup going into second quarter. That, to my mind, is the most crucial variable which will determine whether the rally continues or stalls. But it's, I think, a few months away for that judgment call.
Dhiraj, hi, morning. I'm just going back to a conversation we were having with Drew Pettit, who's the strategist for Citi. And as we all know, Citi has just downgraded India recently, right? Yeah. He made a very strong argument because on one side you have foreigners who are saying India is not expensive, earnings are all right, just about okay. You've got other markets like South Korea, China looking better. So they're allocating money there, they're selling here. And then you have, of course, the Indian market because of the domestic flows being strong, that SIP book being very strong. I mean, India, I don't know when India will ever be cheap, because there's so much of local money buying Indian stocks. Yeah. So then we're in a bit of a funk, aren't we? Because the FPIs are selling, domestics keep buying, and we remain in a range. I mean, how long do you think this will last?
Yeah, so the FPIs will come back in only when earnings growth accelerates. So, whichever way you actually cut it, the current expectation which the market has that from September quarter, we will start seeing inflection point for earnings growth to start picking up, and second quarter will gather pace, are the most crucial variables which will determine whether the rally continues or not. So at this point of time, you're right. There's a tussle. If you look at the last 12-month performance, right? I mean, US S&P 500 is up, I think, 13 or 14%. Nasdaq is up 13. India Nifty is up just 2% in US dollar terms in the last 12 months. Germany, Korea, Taiwan, even UK has done better than India. So what you're saying is absolutely correct. And for accelerated move in our market, we need FPIs too, in addition to the domestic money. And that, to my mind, will chase earnings. And for that, we might have to wait till September quarter.
I was just thinking, folks, we haven't used the word melt up in such a long time, right? Prashant, when was the last time you used melt up to describe the Indian market? For old time's sake, at least it should come back, no? I mean, that phase or that sense of absolute golden euphoria, but I think we're still waiting for it now.
Well, that's right. Hi, Dhiraj. Good morning. I want to ask you about a stock. You want to guess which one?
Yeah, of course. It's done very well in the last 3 days.
Is it done and dusted, though?
No, I don't.
You think bulk of it is in the price? By the way, I mean,
for
those who are not...
Which stock are you talking about?
It's Zomato Eternal. We have been talking about it from 100, 120, 150, 200 rupees, 300. So it's not just for the, for clients now. As a customer, you're not going to be only happy. Shareholders as well who got in, they'll be very happy. Tell us what's the outlook from here on?
So our team is still very confident on the stock, and it's one of the core holdings in one of our flagship portfolios in asset management. We still believe that the hyper growth journey for this company continues. The market leadership position continues. People keep on getting worried a little bit every time some new player or even an existing player launches the quick commerce business, saying competition is heating up in the space. But I think by now, leadership is very well established. So even if some competitor and some other players come in, it probably will compete versus each other and not really threaten the numero uno position for this company. So till such time the hypergrowth continues, and for that there is a long journey. I don't think there is one should be in any rush to change the view on this one.
Almost 3 lakh crores in market cap, Dhiraj.
Interesting, very interesting. It's larger than a number of very well-established old economy stocks now. But that's the way the world is moving. Look at all the mega caps in the US. I mean, they're all sort of new economy players.
Yeah, absolutely. And we'll see what this goes. But so, I mean, such divergent views on this one, right? But I think more and more people are sort of throwing in saying, well, must have this one because it's done well. And gains get more gains in that sense. What about, Dhiraj, what else? I mean, Paytm, any thoughts?
I don't have a very clear view on this one, but just browsing through the results which came in last evening, it seems very encouraging. But I don't have any concrete view on this one.
Okay. So, Dhiraj, what else? I mean, we've discussed Zomato. Where else? This market is so hungry for growth ideas, right? Look what happened. Ixigo, the lead Travenues Tech, that stock Ixigo, they reported numbers and growth was good. That stock went up, 20% in a matter of 2 days after numbers. And that's the thing. There's such appetite, such hunger for growth stocks. Do you see anything else on the horizon? The wire and cable guys, for instance, they've done well this quarter. What else are you keeping on your radar?
So, the reason for that at a slightly higher level is something which I mentioned on the channel the last time I came here as well, that earnings are getting very, very polarized. This is a very different phenomena from, let's say, FY22 to 24, where earnings was more widespread in the sense that a larger group of companies, a larger number of companies were able to deliver growth. And as the economy has slowed down a little bit, there's a risk that global economy will also slow down, looking at everything which is happening in the world right now, either on the trade front or geopolitics front going into next year. A very small bunch of companies will actually deliver growth. So this environment will end up becoming sort of similar to what we saw between 2015 to 20, where only a handful of companies were able to deliver strong earnings growth. And the entire pool of money just kept on chasing the same stocks, and the valuations became astronomically high. So I see a repeat of that over the next 3 years. I think widespread earnings growth environment is over for the time being. And like the couple of names that we discussed right now, we will have to hunt for few individual names where earnings growth is actually fantastic and the quality of earnings is good. We have to beat the market.
But Dhiraj, that's precisely what I'm asking you. That's why I'm asking you. Give us some more names, some more clues at least, because it's not easy to make money in this market anymore. So help us out here.
Yeah, I mean, I generally prefer to avoid giving names, as you know, right? So
okay, clues at least, sectors, clues,
in fact, sectors. You'll find winners in all the sectors. So like we started the discussion with financial services. So a few of the large private sector banks are clear winners out there. The quality of earnings is good. Valuations are not that stretched. There is a fair bit of logic to say credit growth and economic activity will pick up in the second half of this year. So that's one very, very clear space. Very select consumer discretionary names, if demand does come back in the economy, buoyed both by interest rate cuts as well as the tax benefit which was given in the last budget, which will now trickle into the hands of the consumers starting this quarter. There'll be winners in that space. I mean, Eternal is one such example, which is benefiting both from a micro as well as a macro tailwind out there. So you could find winners in these spaces. Some financial services, specific consumer discretionary, autos, very, very worth watching very, very closely. Demand has been weak for a very long time. let's see if the interest rate cuts spur a demand growth back into autos as well.
Okay, all right. Dhiraj, not letting out names, but one space that has been disappointing is old tech. The earlier darlings of the market. Now today, all eyes on Infosys, because from the large cap names that will at least grow, and in all probability we'll see a revision in their guidance. How are you placed out there? Because my director is going to pull up a chart. It's actually underperformed even the Nifty. Your take.
I'm still slightly cautious on this space. And again, when I say cautious, I'm saying broad brush cautious that there could be individual names which could shine in the space as well. The reason being, I think everything which is happening in the US, whether there's a deep slowdown or a shallow slowdown is the only debate in my mind, but there has to be some deceleration in the economic activity and growth in the US going forward. It's not possible that with so much of trade barriers, tariff controls, XYZ and the other, growth can actually accelerate. So IT space being directly sensitive to what happens in the US and US economy could actually be in a slow growth zone for another year and a half. So I just continue to be cautious.
By the way, Nigel, Infosys will report, but so will Coforge.
That's a stunner.
That's the one to watch out for. Coforge stock should come up on your screen. Out of the pack, IT pack, I mean, just look at expectations.
Yeah.
This is the one which I think has got highest growth expectations. In last few quarters, I mean, it has actually beaten what the street has said. So just keep an eye on this.
And just to close the loop on Eternal, in terms of market capitalization, 3 lakh crore and the 28th most valuable company on the BSE, the top 100 market capitalization company. So what a journey out there.
I think Coforge, I would rank as probably last 3-4 quarters, the strongest management commentary on the street. I think the only one that comes close today is the management of Schloss, Bangalore, Leela Hotel, sounding as confident about their business, 400 crores in profits this year. But anyway,